Welcome to the Virtual Roadshow series presented by Channelchek and Noble Capital Markets. Of the 6,000 small and microcap companies listed on Channelchek, today we're featuring Energy Fuels, NYSE ticker symbol UUUU. Research coverage of Energy Fuels is provided by Noble Capital Markets. Noble is a FINRA-licensed, SEC-registered broker-dealer. All Noble research is available on Channelchek. Following the formal presentation, Mark Reichman, Noble Senior Research Analyst covering Energy Fuels, will ask our presenter a selection of the questions received during the broadcast. And now, here is Mark Chalmers, CEO of Energy Fuels, to make the presentation. Mark, take it away.
Thank you very much for that introduction, everyone. It is my pleasure to be talking to you about our company, Energy Fuels, America's leading producer of critical minerals. Our main focus always has been and always will be, first, primarily uranium producer. As a uranium producer, but we also are the only conventional producer of vanadium, and we are entering a very exciting space, the production of rare earth elements. During the course of the presentation, I will likely be making some forward-looking statements, so those are included at the end of the presentation on pages 23, 24, and 25. Just to kick it off on the key investment themes of Energy Fuels as a critical minerals producer, as I mentioned, we're the largest producer of uranium in the United States, or that is our key focus. We have more assets that are ready to produce quicker, faster, on a greater scale than any of our peers on the uranium front. We also, in 2019, were the leading U.S. producer of vanadium from conventional sources, and we have substantial vanadium inventories at the mill as we speak. I mentioned the rare earths. This is a very exciting area for us as a company. We are moving very quickly here. We didn't announce until April that we are entering the rare earth space, and I'll give you more information on that shortly, but I think it's something that should get everyone excited if you're an investor or potential investor in Energy Fuels. The U.S. government is very supportive of both the uranium industry and the rare earths industry, because we become overly dependent on developing countries, particularly countries like China and Russia, on many of these products, and it's become much more prevalent with the recent issues with COVID and our dependency on a number of critical materials, not just uranium and rare earths, but other critical items, and I'll talk more about that during the presentation. Lastly, we have a stronger financial strength than any of our peers. We are retiring debt early in October. We will be completely debt-free, and we have in the order of around $50 million of cash or working capital or inventories in our treasury right now, and that puts us in a very unique position. Just a kind of an overview of how we've become the largest producer of uranium in the United States. It's kind of been a bit of a consolation prize because uranium production has dropped off so quickly in the United States because of low uranium prices. We are the only company that has 3 licensed, constructed, and operable production facilities. 2 of those are on standby. Those are our ISR, in situ recovery facilities, and we are the only one that has an operable conventional mill, which is more of the traditional way of recovering uranium in the United States. So I'll talk more about that shortly, but having 3 production facilities fully licensed and constructed and soon to be completely paid for in early October is a very significant differentiator. This is our footprint. It's a large footprint from Wyoming all the way down to South Texas. The 2 green stars, up in Wyoming, that is a Nichols Ranch. That's the ISR recovery facility that's currently on standby. And the other green star is down in South Texas, and that is Alta Mesa, which is the other in situ recovery facility that is on standby. The Blue Star, which is in the Four Corners region of the United States, in Utah, is the White Mesa Mill. And as I said, that is the only remaining permanent operable conventional mill in the United States. And that is also the facility that also can recover vanadium. And it is the facility that we plan to be producing shortly rare earth concentrates. We have a number of other projects that are in the Four Corners region and in Wyoming. Those are the green dots that surround these production centers. I also want to point out that the little gray triangles, most of which you see on the eastern coast of the United States, are existing nuclear power plants. And I think a lot of people do not understand that the United States currently gets about 20% of its electric power, and this is the clean energy. This is 55% of the carbon-free energy in the United States comes from nuclear power. So nuclear power is very important to clean energy and baseload energy in the United States of America. This table is a list of the numerous projects we have. Most uranium companies that you could potentially invest in would have one or two uranium deposits at best. We have a multitude of uranium deposits, and they are both conventional and in situ recovery. Most of our projects are fully permitted and developed. We do have some that are in the process of being permitted, and a few of our projects, the uranium and the vanadium are co-hosted, and that is the reason we can produce vanadium as well. Again, just a bit more summary on some of our key assets. I talked about the White Mesa Mill, and to put it into context, the White Mesa Mill was built in 1980, so it's about 40 years old. It's been refurbished a couple times. It's our flagship asset for the company, and it has produced in the order of around $2 billion of uranium vanadium over the course of that 40 years. We soon believe we will be producing commercial quantities of rare earths, and so we'll expand the ability of that facility to contribute on particularly this host of critical minerals that the United States government and the U.S. as particular has become dependent upon. Nichols Ranch is a newer facility. It has produced about 1.2 million pounds of uranium. It has a number of licensed well fields, and the well fields are where we extract uranium. 34 licensed well fields that are ready to go into production at any time. Alta Mesa, also relatively new, has produced about 4.6 million pounds of uranium and is on a private ranch in Texas, a very large private ranch, might add, with excellent exploration potential to expand the resource. And then the Canyon Mine at the bottom is what I call a momentum project. I actually built this project in the late 80s, and it is quite small, but it is largely developed and ready to go into production very quickly, and at probably some of our lowest costs with about $30 per pound. Talking a bit more about our rare earth value proposition and opportunity. One thing that many people don't understand is that many rare earth ores contain uranium and other radionuclides, and that's what puts us in a very unique position as compared to others that are trying to enter this space. Currently, the Chinese are taking rare earths, primarily monazite feeds, into the country that contain the uranium and thorium and processing for the uranium and the rare earths. And effectively, what we're planning to do is the same thing, but in the United States of America. The White Mesa Mill, fully constructed, as I said, and paid for, can process rare earth ores under our existing licenses, or perhaps a few minor amendments, but we think we have all the permits required to get going here with that facility. Our current test work, we're doing test work, which is very positive. We have a number of very experienced people that are working on this project. We've also complemented our team internally with some external world-renowned rare earth experts, both from a commercial and technical perspective. I'll talk about that more. and we're currently in active discussions with several entities to supply rare earth feeds to White Mesa. And so we are looking at supplying or securing supply agreements, including securing agreements to sell the concentrates that we make at White Mesa Mill. White Mesa Mill is quite an interesting facility. It is very flexible. And over the course of the last 25 years, the facility has basically been licensed to receive a number of different natural uranium feeds or feeds that contain natural uranium. And so treating different feed sources is not new to us at all. As I said, it is licensed and constructed. So having that facility, you avoid the long lead times and uncertainties. We're permitting a new facility. The treatment of rare earth ores presents no additional health, safety, or environmental risk. We have a 40-year history of recovering uranium and vanadium at that site. And so this is not new to us, and it actually fits perfectly with our core business. The other thing is a mill for decades is using and utilizes many of the same processes required for rare earth recovery. And we believe that we will be generating positive cash flow from rare earths within the next 12 months. And no one that's new to enter this space, and even those that have been in this space for perhaps a decade or more, very few can say that. So we're very excited about this opportunity. Just again, continuing on the rare earth space, we did sign a letter of intent with NEO back in July. NEO is one of the world's leading producers of advanced industrial materials, including rare earth-based products. And under the direction of their president and CEO, Konstantin Karyanopoulos. Konstantin is one of the most experienced and successful persons in the entire rare earth space in the world. And as far as I know, Konstantin has done the largest transaction in the world when he sold NEO in 2012 to Molycorp for $1.3 billion. So Konstantin is very actively involved with our plans with rare earths, and they could potentially be a purchaser of some of the products that we produce. So in addition to Konstantin, we have Brock O'Kelly. Brock O'Kelly is worked with Konstantin at Molycorp. He has about 35 years of rare earth processing experience, mainly at Mountain Pass, and he's currently an associate professor at the Colorado School of Mines, focusing on rare earth recovery. We also have a long history, or I have a long history with ANSTO out of Australia, which is a world leading experts in the rare earth sector. And we also have a relationship with Jack Lifton, which many of you that have followed the rare earth space will probably know Jack. He has decades of experience in the industry, and he is an advisor for us for the company. Now, I'm going to shift back to our core business, which is uranium. Uranium and nuclear power is growing in the world. It is 24/7, it's reliable, it's affordable, high capacity factors, zero carbon emissions, zero air pollution. I think that there is a renaissance occurring with nuclear power, particularly with the interest on the small modular reactors that you're seeing, not just in the United States, but around the world. The world and the developing countries like China and India, they have to have nuclear power or they'll choke to death. So even though the growth as of late is slow, it is growth. In the little chart up there in the upper right-hand corner shows the World Nuclear Association data for reactors that are under construction or planned or operable. Before Fukushima, so going back in July of 2008 to currently, Fukushima was 2011. The growth is certainly there, and it will continue to grow, because if the world is truly interested in reducing carbon emissions, you cannot get there without nuclear power playing a significant role in that growth of clean energy. This is also a chart from the World Nuclear Association showing the growth in demand for uranium for the nuclear power plants looking out to 2040. Kind of that red hashed area is the gap or the shortfall from existing known projects that either are operating currently or on standby. So there is a bright future for nuclear power and for our company in the delivery of uranium to those power plants. And just over the course of the last number of months, particularly during the period of that March and April, the price of uranium did increase substantially, about 30%. That was because of supply disruptions caused by COVID-19. Price has come off a little bit, but there are a number of, well, as I showed you the last couple slides, the growth of nuclear power all bodes well for increases in uranium prices over the next year or two or three. The U.S. government, the Trump administration, is a very strong supporter of nuclear power. There was a report that was released on April 23rd from the Nuclear Fuel Working Group. This was one of the largest policy statements in decades, and I'm proud to say that our company was the main uranium producer that was able to contribute to this report and took the lead in the industry in the United States. Now, there were other people that participated, and we appreciate that support, but Energy Fuels was by far the largest driver of that in this last couple of years. It is a nonpartisan policy document, supports a variety of solutions to support U.S. uranium mining and conversion and enrichment, as well as nuclear power itself. It provides strong justifications for congressional appropriations and executive actions to support the industry as a whole. Some of the findings and the outcomes is the Trump administration for the 2021 budget has put in a request for $150 million a year, and this is supposed to be for 10 years for $1.5 billion for a uranium reserve. There are several bills in the House and Senate currently working through committee and appropriations. The U.S. Department of Energy is aggressively supporting and pushing for appropriations, of the stockpile and some of these other initiatives. The timing is uncertain, but it is getting substantial support and attention in D.C. The other thing that was quite important is there is in the works, it's not completely done yet, but the extension of the Russian suspension agreement. Russian suspension agreement was limiting imports of Russian uranium into the United States. The current agreement currently expires at the end of this year. So a new agreement is being put in place to extend that for another 20 years. And the U.S. is finally playing hardball with the Russians. And the new agreement does include a reduction in imports of Russian uranium over the next few years and ramps it down and tightens up on the amount of Russian uranium that can come into the United States. I talked about vanadium and that Energy Fuels is really the only company capable of doing primary vanadium production. So primary is producing it from mines, not recycling from other sources. We produced about nearly 2 million pounds of high purity vanadium last year. We've got about 1.7 million pounds of that in inventory at the site. It's valued around $9 million at current prices. We still have the ability to produce more vanadium very quickly on site and with our other mines. And we plan to sell some of that product when market conditions warrant. The company also pushed forward or is assisting. We're not the main drivers of the vanadium Section 232, but there is an initiative with a couple other parties looking for restrictions of vanadium coming in the United States for the same reasons as the issues that the Russian suspension agreement is being renewed and improved. There's also an initiative for vanadium to reduce imports into the United States, because vanadium is also a critical material. Now, this kind of shows where we fit in with our other peers in North America. Now, Cameco, we don't really consider a peer because of their size, but everybody else from NextGen down the peninsula, we have a market cap of just north of $200 million. I think a couple of the key differentiators is that we have more cash, inventory, or working capital than any of our peers, with the exception being Cameco. We also have a reduction in our debt. This table shows that we have $8 million worth of debt, which we currently have, but we're planning to pay that off in early October. We'll be completely debt-free. We also have substantial inventories, as I said, of vanadium, but also uranium. So we have somewhere in the order of around $30 million of inventories of uranium, vanadium, finished product. But the other thing that's really a significant differentiator is these little green ticks or red X's off to the right of this table. Our company in 2019 had both in situ recovery and conventional uranium production. And you can see on that table, the only other company that had that was Cameco Corporation. Okay. The other thing is with the green ticks is we're the only ones that have the ability to produce vanadium. We're the only ones that have the ability to recover alternate feeds, and I'll talk a bit more at the end of my presentation there. And we are the only ones that have the ability to produce rare earths. So really, when you look at our peers, there are no peers for us because nobody has these capabilities that we have. Most of these companies on this list are 100% uranium focused, and we have, in addition to our large position for uranium production, we have the visibility for both vanadium and rare earths. This graph is one of my all-time favorites because it shows who has produced the uranium in the United States over the last 15 years. The gray is Cameco Corporation. The blue is Energy Fuels, or our assets. The green is our energy, and kind of the pinkest is Uranium One. There are a couple other uranium producers, but they have really not contributed any material uranium production over the 15-year period of time. But what's really, really important for people to understand that between Cameco and Energy Fuels, so the gray and the blue, 85% of the uranium produced in the United States over 15 years were from those two companies. That speaks volumes. If you include UR Energy, now they didn't exist 15 years ago in terms of uranium production, or Uranium One, 97% came from 4 companies. So we are very confident that as our company has a long history of producing uranium from the past, we will also be a very significant producer in the future, and but very few others will. And I think you should really think about this graph when you look at who you invest in, based on proven track records. Now, I just touched briefly on the I call alternate feed. There's, in addition to the uranium, vanadium, rare earths, the company over the last couple decades has a history of receiving between $5 and $15 million a year of treating low-level natural uranium feeds into the mill. It is one of the reasons the mill exists to this day, and we still continue to do that. We still continue to generate about $5 to $15 million per year. But we think there are bigger opportunities than just that. And that opportunity is for cleanup of abandoned uranium mines that were mainly mined during the Cold War era of the 50s, 60s, and maybe into the 70s around the western United States, but particularly on the Navajo Nation in the Four Corners region of the United States. This little picture graph shows where White Mesa is located. It's the blue star up there in southern Utah. And then you can see the Four Corners, the state boundaries, and you can see the Navajo Nation is sort of in this orangish kind of color. And these red dots are mines that were mined in that 50s, 60s, and 70s that either weren't reclaimed at all or were not reclaimed properly. The U.S. government has collected $1.7 billion in trust to clean up those mines. White Mesa Mill, right there in the little blue star, is in the region, and we're in an outstanding position to participate in the cleanup. To put it into context, and we have all the permits and licenses to do this, if you look at the little green star that's down there by Grants, New Mexico, in New Mexico, we are currently receiving material from a private mine, not on the reservation, and they are trucking that material from the little green star all the way up to where the blue star is, paying us a fee, and we receive the contained uranium in that low-level material for free. So we're already doing that. We're pushing for another a pilot program with the Navajo Nation to do some to basically do some of this work for free. But we think we're in an ideal position to receive some of those fees from that $1.7 billion, and we have the ability at the mill to clean up the entire Navajo Nation with the facilities that we have and the tailings facilities that we have or are in the process of permitting. So this is an exciting insurance fund, I believe, over time, which will eventually come to Energy Fuels and White Mesa Mill. And the EPA just opened an office in Lakewood where we have our corporate offices to look at these type of cleanup opportunities in the Western United States, including the Navajo Nation. So we're in an ideal spot here. So look at back to our financial strength. I mentioned in the order of that $50 million of cash, marketable securities, or inventory at the end of June. We have this substantial inventory, which no one else in our peer group has, uranium and vanadium of the magnitudes that we have. We hope to have, pushing towards that 700,000 pounds of uranium inventory at the end of the year. We will produce a token amount of uranium in 2020, between 125 and 175,000 pounds. I mentioned that we had a market cap around 200 million. And as I said, we're addressing our debt at the end of October, early October, we'll be completely debt free. We also, when we talk about that $50 million of cash or inventory, that's valuing the uranium at $23 per pound. Well, currently it's around $30 to $31 a pound. So in fact, the value of our inventories are greater than we're showing on our financial statements. So in addition to the things that I've discussed, we're in the process of looking at divesting 2 or 3 of our non-core assets. We've asked for a minimum expressions of interest of 15 million US. For people that might be interested, we can provide them with a permitted mine or mines and a milling agreement to White Mesa Mill, which would make them have instantaneous production visibility. We have a number of parties that have expressed interest, and we're working through that process, but it could potentially generate around $15 million to our bottom line, and we think that again is material, and that is again something that none of our peers have the capability of doing. So in closing, Energy Fuels has unmatched ability to increase uranium production quicker, faster, and a greater scale than any of our peers, not including Cameco, but all our other peers. We have more production facilities, more capacity, more experience. Remember that graph that shows 15 years. The rare earth opportunity is moving very quickly. We're well positioned financially with strong balance sheet. We're retiring debt where many of our peers are increasing debt. We're evaluating this divestment opportunity, which could generate up, in the order of $15 million or perhaps more. And nobody else has the vanadium, the alternate feed, the land cleanup, and you could bolt on to the rare earths in the group. So we really don't even belong in the peer group because there is no peer group like Energy Fuels. So thank you very much. And I think Mark will now be in a position to ask me some questions.
Thank you, Mark. I'm Mark Reichman, the Noble Senior Analyst who covers energy fuels. I will be reading the questions submitted for Mark's response. So the first question is, at what level do long-term contracts begin to be attractive?
Well, look, long-term contracts. I mean, I think one of the things that is really tells a lot is when you have companies like Cameco and Kazatomprom buying uranium, okay, rather than producing it, they're buying uranium. I think that long-term contracts become attractive when you start looking at around $50 or greater. It doesn't mean that you can't make some limited amount of money less than that, but you really need $50 a pound or greater to get the fair return on a Western produced pound of uranium. I'm talking, when I talk Western, I'm talking uranium produced in the United States, Canada, and Australia.
The second question is, what price do you need to entertain selling down your uranium and vanadium inventories?
Well, good question, Mark. You know, certainly we believe that we're going to get a better return by holding that material and selling it when we think the price is right. You know, look, it could be at current prices, which are $30 or $31, because as I said, we're holding it on our books at $23 for the uranium. But we want to maximize that. So we haven't really come up with, you know, exactly what that price would be. I mean, we would really like to sell it at north of $50 per pound, because, you know, if you look at a delta between 23 and say $50, and you sell 650 or 700,000 pounds, that's going to give us a huge uplift in cash in the company. And again, none of our peers are going to be able to capitalize like that because they don't have the magnitude of uranium in inventory.
The next question is, even if Russian uranium imports decline due to the Russian suspension agreement, is there a risk that producers outside of Russia could increase market share at the expense of U.S. producers?
Yeah, it's really kind of, you know, it doesn't limit. I mean, it limits the import of Russian uranium. And yes, there are. It's a big world out there. So nuclear products will come from different countries. So, but the thing about the Russian suspension agreement is the Russians, similar to what the Chinese have done with rare earths, they've been trying to kind of take over the world with their capabilities. And the U.S. market is the largest market for nuclear products in the world. And it is currently equal to more than France and China combined, one market. So it materially impacts them when they are cut back on the quantities that can come into the largest market out there. So the Russian suspension agreement on its own is not enough to sort of, you know, catalyze the U.S. market, but it is a very important step in the right direction.
So that dovetails nicely with the next question, which is, outside of a federally funded uranium stockpile, what other levers are there for the government to support the domestic uranium industry?
Look, I think the key thing for the uranium industry is we need higher prices, and it's really a clash between Western producers and state-owned enterprises, and primarily countries like, you know, Russia, Kazakhstan, China, and all that. The real driver is price. That's what we really need, is we need higher prices. But there are other things that the government can do. For example, the Russian suspension agreement is something that they can do. You know, there are issues with regulatory issues when it comes to regulatory streamline, access to public lands. You know, all those can help, but we really need higher uranium prices. And as I said, the fact that Cameco and Kazatomprom, when the price uranium is, say, in the low 30s, spot price, are buying uranium, that tells you that they believe it's better to buy it than it is to produce it. So, you know, and I think the other thing that's a driver the government can do is supporting the entire fuel chain of the nuclear fuel cycle and supporting nuclear power in the United States as a whole as well.
With respect to the sale of non-core assets, are any regulatory approvals needed for transfer of ownership?
Nothing material. I think that there's certain things like, reclamation bonds and stuff that have to be transferred over. So there would be some minor things that would have to be shifted over, but nothing material. And as I said, the key to the divestment of these assets is the ore from those operations that are fully permitted still have to come to White Mesa Mill for processing. So we still have the mill. We would be able to process that ore, and we would still have the marketing rights for that ore. If we do a deal with another party, we'll come up with some arrangements on how we best manage that. So we think it's a great outcome for our shareholders, and it's a great outcome for other shareholders that may invest in these other projects because they are ready to go. They can produce uranium now, and the projects that we're looking at divesting, a couple of them have a bigger production history than some of the people that call themselves producers in the United States, and they have produced more ore at lower prices than some of the people that are talking and considering themselves producers in the United States. So it's quite a material thing for us and others that want to partner with us on possible acquisition.
Next question is, how much funding do the recent awards by the Department of Energy represent? And I think that's referring to the rare earth oxides from coal-based resources that was recently announced.
Yeah, look, it's a small award. It's done in phases, so there's no guarantee you get to the next phases. But look, in the order, it can be in the order of $1 to $2 million or somewhere in that order if these different phases are fully executed. The real award here is that the U.S. government has decided that they need to be back in the rare earth business, and there are substantial funds that could be available for building additional plant and equipment for those that can demonstrate that they are actually able to deliver. We believe we are going to be, if we're not the key driver of that in the United States, we'll be the second driver in that, and we think that is exciting, very exciting, because we are confident we're going to be delivering rare earth concentrate, carbonate, within that 12 months, commercial scale, so watch this space. We'll give more information to the market as it unfolds, but it is a very exciting opportunity, and the market isn't valuing us based on our ability to produce rare earths yet. They will. When Mountain Pass goes public in November, they're going to go public. Their anticipated market cap when they go public is $1.5 billion. Lynas, which is the biggest producer outside of China, I haven't checked, but their market cap is probably getting closer to $2 billion US. Watch this space. There's a lot of growth in it for, we believe, for Energy Fuels and those that participate with it.
And Mark, which advanced nuclear technologies do you view as the most promising?
There's several of them out there. NuScale has the agreement with the Department of Energy where they're building these small reactors up in Idaho. Bill Gates, TerraPower is another one that's funded largely by Bill Gates because he's a believer in nuclear power and believes it is a very important thing for not just the United States but the world. And there's a number of others. I mean, the Chinese have small modular reactors, the Russians, the Canadians. So I think the concept that a nuclear reactor, a typical nuclear reactor, are very large units. Typically 1,000 megawatt to maybe 1,500 megawatts. And these small modular reactors, much smaller. They will be built in a modular basis to reduce the capital cost of building these reactors. mean, some of the numbers I've seen thrown around is that the capital cost of small modular reactors could be about half of a normal reactor. And the capital cost has been one of the stumbling blocks for the nuclear industry. They also include the latest technologies. I mean, a lot of the nuclear power plants that are out there operating today are like driving a 1978 Chevy pickup, okay? They have good technology, but they don't have modern technology. So the small modular reactors are looking at, passive safety systems and whatnot that require no pumps or valves or whatnot. And this is where I think it gets really exciting.
And then what opportunities and risks does the upcoming presidential election have for the nuclear and uranium industries?
Well, I think a change of government always creates some amount of risk. But I do say this, that the Biden administration is talking quite negatively about carbon emissions, but they're not talking negatively about nuclear power and actually support nuclear power going forward, because they know they have to have it to reduce carbon emissions. They have to have it. They can't get around it. But look, we're trying to position ourselves on any outcome. And one of the ways we're doing that is paying off our debt. We think that the rare earths has substantial bipartisan support. We think that's politically correct. We think that because the Biden administration supports nuclear power, that the uranium industry will have support as well. So I think that because we can diversify ourselves more than others with both the uranium, the vanadium, the rare earths, potential land cleanup on the Navajo Nation, and to me, that in itself is one project that I would love to assist the Navajos cleaning up some of those legacy sites. It's really a good news story to get them cleaned up finally, and for our company to hopefully participate in that, like we're currently doing. So it's, I think we will get material there in due course for the right reasons. We also are a large employer of Navajos at the White Mesa Mill. We have about 50% of our workforce is Navajo. So we're very committed to that. So look at, it's a bit crazy out there, but I think that we are really well positioned to be able to be flexible with any changes of government.
Well, Mark, that is all the time we have today. Thank you for helping us get a better understanding of the company's story. If you would like to access our independent research on energy fuels, please go to channelchek.com and type the company name or the ticker UUUU in the search box located in the top left company data section of the site. A recording of today's virtual roadshow will also be available on Channelchek. Again, thanks to our guest, Mark Chalmers from Energy Fuels.
Thank you, Mark, and thank you those of you who have watched this presentation.
This has been the Virtual Roadshow series brought to you by Channelchek and Noble Capital Markets. Log into Channelchek or subscribe to our YouTube channel to get the full catalog of roadshows and C-suite interview channelcasts. Register for Channelchek's no-cost premium content and receive notifications of new releases from both series. Thank you for joining us.